Hey everyone, it's December, a very important month to be looking at the stats because all of you that are watching are curious to know what happened in November, but lots of people want to know what's going to happen next year. So I got to go over a few things, but let me just start by saying this. The overall economy in Canada is not great. Everyone who's been watching, you've noticed these interest rates dropping. There's expected next week on December 11th, we're expected to see a 50 basis point drop, and it's expected to see another drop in January as well. Working with Sandro Mosca from RBC, he's in our office, he's great, he studies this a lot more than I do. He is suggesting that on the fixed term rate, because don't forget the Bank of Canada and lending rates are not, they're not identical. Most of the time they are, but right now they're not, and they probably won't be for a while. But we could be seeing, as low as 3.5 or 3.7 for a 5-year fixed rate mortgage, which is really beginning to be attractive. We're getting back to close to where we once were. I don't think we'll ever get as low as we were, with the COVID days, but definitely, to be looking at 3.5 really is good for Alberta. Now, I mean, obviously, with our economic environment in Canada, it's not great. It looks like the government has mismanaged this, as they often do, and they reacted with really raising interest rates, and they reacted quickly, and it's put our GDP and really, for a lot of people believe we're in a recession right now. Now, that being said, let's remember though, we're in Alberta. And I hope you all don't forget this, because if you really do study this and go back 40, 50 years, you'll notice that Alberta doesn't really follow the rest of Canada. And, we're still a very big energy province, even though we're diversified more than ever. But with energy, you're going to find that we could end up doing quite well. And Ontario, for example, may be doing very poorly. So you got to consider that, which is why I'm pretty optimistic for 2025. I think these lower interest rates are going to help us. And, when you see these stats I'm about to show you, I think you're going to see this is an indicator of what's to come in 2025. And I'd have to say, if I were buying right now, if I were a buyer looking to buy real estate in either Calgary or Edmonton especially, I would be trying to take advantage of the market right now, because I think we could see some price increases next year. But that being said, let's kick it off and show you exactly what happened in November. All right, let's take a look at this hard data that I love showing you guys every single month. You'll notice that right here in green, we did 1,797 sales on the MLS in the month of November 2024, which is what we did in 2023 was 1,783. So we actually did a little bit more sales. But here's where it gets interesting. Look at the inventory right here. We have 4,352 properties for sale compared to 3,000 a year ago. That's a 45% increase. That's where we're seeing the difference in the market. In the spring of 2024, we had a red hot market, and it wasn't that the demand was any more than it was in 2023. It's just that we lacked inventory in the spring. And then suddenly around the end of, I'd probably say the end of April, beginning of May, more and more people started putting their properties on the market. And now that's why we're at 45% inventory. And that changes everything, having 45% more than we had a year ago, because it gives the buyers a lot of choice. And that means if you're a seller, you're now going to have to be very realistic on what your pricing is. And you have to pay attention to the competition. In fact, there's a lot of details you have to pay attention when you see inventory levels like this if you're a seller and you want to be successful. That's why I wrote a whole book on this. And of course, by the way, you can always reach out to me if you want to get a copy of my book. You'll love it. But if you're a buyer, you got so many good choices right now with that much more inventory. So you can take your time. You're not seeing some of the properties are not selling, in 1 or 2 days with multiple offers like we were in the spring. So it's much more of a relaxing opportunity for the buyers. And to me, I think it's a good time to be buying. And I'm going to talk about a little bit more about interest rates and show you a chart in just a minute. Anyway, let's just go down here. We have 587,900 is our benchmark price just last month. But if we go into our median price for the whole year, we're at 573,000. So month over month, we were up 3.52%. But look at this year over year, 14.86% a year over year. Like, that's huge, almost 15% increase in pricing. Well, there's no way we're going to see that in 2025 if we've got this much inventory. That's not going to happen. And I'm hoping, I really am hoping that we do continue to have higher levels of inventory, because it's not very healthy to be going up 15% in a year. Believe me, that's too much in 1 year to be going up. I know it might sound really good if you're a seller and you're not moving and you think, oh yeah, my property value just went up. But from a market perspective, it's very healthy to have more of a 3 to 4% increase. Although I do think we're probably going to see a little bit more than that. If I were to make a bold prediction, and this is just based on what I'm seeing, none of us, and I mean, I don't care who they are, can't really look into the future with great certainty as to what will happen. But I do think we're going to see probably about a 7% increase in our median price next year. Now, keep in mind, that does include condo when you see these numbers. That's not, that's the entire market on all the products. All right, let me just show you a couple of other charts here now too. So I was just recently in Edmonton at Government Liaison Days, and I took this photograph off the slide that they showed us. And this is the chief economist for the Canadian Real Estate Association, and he is looking at interest rates. And this is a very important thing to consider. So if you look at the black is the Bank of Canada policy interest rate. This is where we've come from, all the way from 2011. And you can see how 22 came and then boom, we just went straight up. And now we've peaked. And this is where it gets interesting. So in green, this is showing what they were predicting interest rates were going to look like all the way into 2027. And then if you go back 6 months ago in purple, they were predicting it was going to drop down into about 3%. And then in July of this past year in yellow, now they're below 3%. Well, look at this. As of November 19th, 2024, this is what they think we're going to be doing here in 2025 and into 2026, is we're going to see about 2.5% is where the Bank of Canada is going to go. Now, it doesn't mean that the lending rates are going to go all the way down to 2.5%. I mean, unfortunately, if you're a buyer, it doesn't guarantee that you're going to see a 5-year fixed rate that low. But it does look like we're going to see probably 3.5 to 3.75%, somewhere in there, which is still really reasonable when you consider where we've been in 2023 and 2024. And I think that's going to bring a lot of more people into the market, because if you're renting right now, take a look at what your rental price is, and then take a look at what the interest rate is going to be at that kind of a low rate, and that can get very, very attractive. And the other thing to consider too, if you're not aware of this, they've got a great program. If you're looking to buy investment property, depending on the type of property it is, you can put down as little as 5% on an investment property with a 50-year amortization. These are some of the programs that the government has come out with to try to solve the housing crisis. So again, feel free to reach out to me if you've got questions about that. This chart I always look at every month. I also have Airdrie, Cochrane, Okotoks, Strathmore, Chestermere. If you want stats on that, just reach out to me and I'll give them to you. I just don't want the video to go on too long. But you can see where we're at year over year, and it's quite amazing when I look at these stats. I mean, the north is up 2.3%, 557,700. The northwest is up 3.9% year over year, 635,500. City center, stayed relatively unchanged at 595,200. Remember, this is including condominium. The west, 715,200, most expensive area in the city, and they're up 4.5%. The east continues to be unbelievable at the rate it's going up, and I see 438,600, still very affordable. So a lot of people look at this for first-time buyers, but it's up 10.5%. And the Northeast, which is just shocking to me, up 5.7%. For many, many years when I was in this business, the Northeast stayed the same. And then suddenly in the last 5 years, the Northeast is on fire, and there's a high demand there. Down in the South, 6% increase in the South at 580,100, and the Southeast at 577,400. 3.6% is what it's up. Now, remember, this is taking 8 sections of the city and it's rounding it off into each of these sections. So the communities within these sections can really vary, and obviously the homes within those communities can really vary. So, this is really just a guideline for you if you're looking at the market. But if you want specifics, again, you got to reach out, or you can also go to my website, which is theviewcalgaryareahomes.com, and I have probably one of the best websites in the city for just getting information on the market. And also my robvanoteam.ca is another fantastic website to get an idea of what's available. So this chart, this is looking at detached houses. You see my wonderful team there, by the way, with Your Home Sold Guaranteed or We'll Buy It. And we actually mean that. We have a fantastic program, especially for people who are in this situation where they don't want to move twice, or they're stressed about, buying before they sell or selling before they buy. We can solve that all for you. It's also a phone call away, and I'll explain it. Right here, 46.68% of the listings that were advertised in November sold. So more than 50% did not sell. We've now got into the balanced market territory. And you can see, look at, it was in March and April this year where literally 100% of the listings were selling. Now we're, back down to what would be considered to be normal. Still pretty good though. I mean, being in a balanced market it's good. It just means, again, you got to be really realistic on your pricing. If you're a seller, you got to be doing all the things right by having a strategy for marketing. You got to be target marketing. You have to be getting your house ready for sale the way it properly needs to be ready for sale. All of those things have to line up, but buyers also have a good choice. Our benchmark price, $750,100, which is amazing that we're here. And I hate to say I told you so, but it was 2 years ago I said Calgary would hit that, and here we are. We hit it last month. Moving down here, this will take us down to the market distribution, and you can see the sweet spot for Calgary is still 600,000 to 700,000. That would be a starter home detached on average in Calgary, and 700 to 800 is creeping up slowly to take its place. And if things keep going the way they're going, these two price points are going to be the same, I predict, by late spring, early summer of 2025. So here's row houses or townhouses. Wow, has that ever changed as well? We're still in a seller's market territory, but 50.46% sold. And when you look at earlier this year, I mean, January, February, March, April, and May, unbelievable. Like literally 100% of these townhouses that were listed sold, and now we're hovering around 50.46%. What a difference adding inventory to the market can be. That brings us to 454,300. That's kind of amazing as well that we're even hitting those price points. Coming down here, you can see 400 to 500. That's the sweet spot. And if you're a first-time buyer and you don't want to live in an apartment condo, a townhouse is the next best thing. And I think we're going to stay really strong. I mean, that's almost 40% of the market to get into townhouses. And they're very popular. They're great for investment properties if you want to own one to rent it out. Divorced people buy them, first-time buyers buy them, single professionals buy them, people with small children even buy them. Townhouses, biggest part of the market in terms of demographics. Well, the party for apartment condos is, I'm not going to say it's over. It's just not as big of a party as it was in the spring, because now we only have 28.95% absorption rate. So now more than ever with apartment condos, you got to be really, really doing everything right to be able to sell when you're only going to find 30% of the properties listed will sell. I mean, and again, they can see we peaked in March where 94% of them were selling. But I can tell you, in the dark days of 2016 to COVID, I mean, we were down by at 1.9% of the condos listed were selling. So this is still a pretty healthy market, all things to consider. And we're not seeing prices dropping at this moment. But if we do continue to see higher levels of inventory, we definitely could start to see some price corrections. Our benchmark price last month on it was $337,800. So that's a pretty healthy market. Still pretty good value when you consider the size of Calgary. And 300 to 400, of course, is our sweet spot. I mean, 41.85% of the market is looking in this price point for condominium. And, then there's still some stuff in that 200 to 300,000 range. Although I do see a lot of the under 300 tend to be one bedrooms. There are still some two bedrooms, but a lot more of them are just the one bedrooms. Okay, this last chart is the housing price index, and I don't often show it. I know there's a lot of numbers on the screen, but let me make some sense of it for you. If we take the city of Calgary here, I've highlighted in yellow, and we got the benchmark price, including condominium, at 587,900. What you'll see where the index says 275.2, well, they started the index in 2005 at 100. So prices in Calgary, including condo, have gone up 175% since 2005. And what this does is allows us to look at shorter term trends and long term trends. So you'll see here the last 3 years we've gone up 24%. The last 5 years we've gone up 38.29%. And 10 years, 26.76%. So what that tells us, as in most cases, this is why real estate is a very good investment, because real estate goes up. The demand is high. And it seems like that's the way it is in Canada, and it looks like it's going to be that way for a long time, because we have had a lot of immigration. We don't have enough housing to meet the demand, which puts pressure on pricing. But it just goes to show that real estate's a good investment. Now, to give you an idea, just even showing some of the other areas, we talked about this in the last chart on the east side of Calgary. Look at this, the last 5 years on the east side, it's gone up 66%, and the northeast has gone up 57%. Now, I can look at the housing price index literally for every community. I can look at it, whether it's a bungalow, whether it's a two-story, I can really break it down to really look at that data. And it's important for some people, especially if you're an investor, or even if you're maybe looking to buy a home and you're thinking, we're probably only going to be in it for 3 years. I really want to be certain that this home has a likelihood of going up, in the next 3 years. This kind of data can be really helpful. So as always, just reach out to me. I can get you this on, the smaller towns around Calgary, any rural properties as well. The housing price index is right across Canada. All right, so just to wrap this video up, I thought I would just show you some stats from realtor.ca just to give you an idea of what the demographics look like from their data as to the age of the users actually going to realtor.ca. And you can see that 22.9% are in the age group of 45 to 54. But closely behind is 25 to 34. We have a lot of younger people that are coming out of university and getting jobs, and that's the first thing they want to do is get into a home. And with their survey, you can see 26% of the people on the site. And by the way, realtor.ca is the most visited website of any website in Canada. So 26%, and I think there's about 150,000 people a day that go on the site. So that's a lot of people going that surveyed that they're going to buy again, 26%. 24 rent a home, and that's up, by the way. A few years ago, this was only around like 20% or 18%, so that's actually up. 19% planning on buying their first home, and keep in mind, this is the next 6 months. 14.8 invest in a property. We got, 13 they're going to browse listings, and 10% say they're going to sell a home, and then 3.6 are going to track market trends. So looks like, just looking at these stats, and of course this is right across Canada, so you can't say specifically for Calgary, but I will say just looking at compiling all the data, especially from what I got at the government liaison days, I only gave you a glimpse of what I saw. It does look good for Alberta. It definitely looks good for Calgary. I think we're going to see a pretty decent demand next year, and my recommendation would be, if you're buying, why not look in the winter months? Right now it's a little slower. The inventory is up. You don't have to wait till spring. I know some of you are thinking, well, the interest rates are coming down. Remember, there's a difference between the actual Bank of Canada and the lending rate. And you're not going to see it drop down 50 basis points on the lending rate. So there's not going to be a massive savings. And furthermore, you could buy a house today, take possession in 3 or 4 months, and if there is some rate reductions,
you're going to get the lower rate when you take possession. If you're selling, I think the market's going to stay pretty strong. You might think, well, the winter months aren't necessarily a good time to sell. Well, the inventory right now is, it's up 49%, so it's significant, and that plays a role. I guess, the question will be is, will we see more inventory coming on the market in the spring, which we very well might, because most people like to move in the spring. So there could be an opportunity to sell while the inventory, even though it's up 49%, it still actually might be lower inventory than in the spring. So that's something to consider. I've had some success selling real estate in the winter months for that very reason. So as always, I'm here for questions, comments. I'd love to hear from you. Send me an email, send me a text, whatever way you like to communicate. And I look forward to seeing you again next year. I wish the merriest of Christmas to every one of you, the best in 2025 as you come into the new year. And I can't wait to see what happens in December.